I've seen this pattern before on Bitcoin. I have to be honest with you. I don't really like it. In today's video, I'm going to do a super quick update for you guys because I have spent the entire week at Formula One Grand Prix thanks to OKX, and I have literally just left the race to come and do this update for you. Now, the reason that I want to do it is because for the entire weekend, all over social media, I have been seeing people talk about meme coins breaking out next and being the next big trade. And I have a big warning for you about that also. But before I can get into the meme coins, I have to show you what I'm not currently liking on Bitcoin, but I'm also going to show you what would invalidate my thoughts and have me start to think the opposite. So if you're new here, welcome. If you're returning, I'm Annie and this is 𝗟𝗶𝗿𝗃. Be sure to smash that like button nice and early so that we can trigger the YouTube algorithm to let them know that you are enjoying this content. And if you're not already subscribed, consider hitting that subscribe button below as well. Now let's get into the Bitcoin price action. What I'm going to show you is actually on the 1 hour chart. Now I've just finished doing my full weekly analysis, and the reason that I'm starting on the 1 hour chart is because basically everything higher time frame than that is really not showing anything. There's either more time that is needed to build more structure so that the price action can become clearer, or it's just not looking like anything is happening there right now. But the 1 hour has my focus, and this is why. What I've done here on this chart is I have manually marked where the new high and the low of the week is going to be when the new week opens. On the TTC customized indicator that we've created, the high and the low of the week is automatically calculated for you, but it resets on Sundays 5 p.m. New York time. And at the time of filming this, we haven't hit Sunday 5 p.m. New York. So I've marked it out so that we can know the highest and the lowest point that price went last week, as one of those levels will often act as a magnet when the new week begins. Another level that you want to know going into a new week is 50% of that area, which is this dotted line that I've marked for you here. It sits at currently about 97,423. So when I have a look at these levels, what I can see is that we had a wick that created the high last week, and we also had the big liquidation hunt that created this week, which is going to end up creating the new low of the week as well. So the moral of the story there is that we have trap traders either side, but the pattern that I'm talking about that I've seen before and I don't like is what is happening right here, where we had the fast move up, we consolidated for a little while, and then we had that liquidation hunt down. And following that, we come back into the range and we just trickle sideways for an extended period of time. Now, one reason why that's happening is because it's the weekend, so volume is always lower on the weekend, and that's what we know on this channel as the weekend trap, and therefore there will be a lot of traders that are uncertain as to where the market's going to go next. You know, some people are extremely bullish, saying that it's very positive that Bitcoin is holding around 100K, and yes, it is. Others are saying, well, we should come down and fill this wick because it was such a fast move. So we sort of have a lot of indecision right now, and that means we probably don't have a lot of market participants. If we have a look at the open interest down here, you can see as well that it's really quite flat. What that means is that come market open, the market maker is going to have to do something to entice people to take a trade, and that usually happens with what we know as a false move week beginning. Now, one thing I want to show you that I don't often use, but sometimes it can be relevant, is something that comes from a different trading strategy that I don't personally trade, but I understand it. And that trading strategy is called ICT. And in ICT, we have something called a Judas swing. And this indicator here I have found has been very, very good at identifying the Judas swing range. Now, the Judas swing comes from the ADR, which is the average daily range, and we are using a period of 14 days for this. This particular indicator marks out the third levels, and the thirds are measured from the high, the low, and then 1/3 from the low and 1/3 from the high, which is a little bit different to the TBD system where we just mark the 50% range, right? But the reason why it's relevant today is because we can see that the price is hovering right around this 1/3 range, which is at 99,605. That's where the weekend trap has been for the whole weekend. And what this actually signifies to us is that there's a high chance of a false move coming. And the false move comes to trick market participants. That's all it is, really. And considering we have very low volume, the market maker has to do something to get you to the table. So I think this week's false move is potentially going to be a very tricky one. And I would be very careful of trading the breakout of this range and expecting it to be the beginning of a new trend, because right now we have a very high chance of having a false move one way and then a very sharp reversal the other way. That can also be a false move that goes to the downside and then a breakout to the upside. So the direction is unclear, but what we can conclude from this is that some sort of manipulation is going to be coming in very soon. Now, when I've seen this pattern before, the reason why I say I don't like it is I remember this pattern very, very specifically because it was very bearish. It's looking so similar to that time that if it plays out the way it did then, it's a bearish signal. And that would mean that these traders up here remain trapped. And so what would confirm it to me that we are going to have more downside would be either a false move into this trap trader zone, then a sharp reversal to the downside, or we just don't come anywhere near it at all and we just fall right out the bottom of this weekend trap. So I'm not personally going to trade it. I'm not even looking to open short positions in this phase of the cycle anyway. I'm just aware of it because it tells me to tighten my stop losses on any long position. Now, if we add the liquidation levels that have been built up over the weekend, we can see there's quite a bit of liquidity both sides of price. And we can see that if we did come up into this trap trader zone, but we didn't actually close above this red vector, they could come up to take the lowest liquidity, then drop it back down to take this. But the opposite is also true, where they come down to take out this level of liquidity at 96,950 and then potentially reverse to the upside. So it's just unclear. And that's why I personally think that we should stay clear of this until the actual false move happens. And then tomorrow, either during Asia UK changeover or UK to US changeover, that's where you'll have a look to see if the false move has actually finished. And then you can take a new trade that should turn us into the 3-day swing. So, as a day trader, I often will trade the false move week beginning because it's usually so obvious to me and it's a good little day trade. In this particular situation, hands off, let's wait and see. Now, whilst I don't like this pattern because the last time I saw it, it broke to the downside, I also have to have an invalidation for that thought and what would make me flip bullish should the price not actually break down. And so the only thing that would have me change my mind and think, okay, it's fine, we're bullish, would be simply connecting the higher lows and also the lower highs. And when I do that, you can see that we are once again in a symmetrical triangle. And that symmetrical triangle came from a prior uptrend. Therefore, you would expect continuation to the upside. But again, just simply because of everything I've said, if we were to break to the upside, I would just be very, very careful that it's not a fake out to trap symmetrical triangle traders. And you'll know that by assessing the candlesticks at the time. But if we get a strong breakout and then we actually change the structure and get a higher low, that's where I'll go, okay, we're not going to break down any further and the trend will continue to the upside. But this brings me to why I'm very cautious about meme coins. Now, number one, we have to look at the dominances. Anytime we want to trade altcoins, the dominances matter. We can see with Bitcoin, we are basically just consolidating in the middle of nowhere and we're waiting to see if we get some sort of a bounce that will give us a lower high and confirm this move to the downside, or it could just keep straight dropping to the 800 EMA. The USDT dominance is still sitting at support, which is fine, but we really do want to see it break that support because the more it heads down, the more we know people are still happy to be involved in crypto, and it's just a matter of figuring out where they're shifting money to as opposed to them being risk off and the whole market gets affected by that. And that brings us to the others dominance, so giving us an idea of the dominance of all the altcoins combined minus the top 10. And what we still are in the same situation where we've had the breakout. We're waiting for it to temporarily top out and see if we come back to get the retest. Now, if we do come back to get the retest, that's where your altcoins might actually start to reverse. And the reason why I'm telling you be very, very cautious of trading meme coins in particular is because if you're seeing potential bullish breakouts on meme coins, and I understand why you are because a lot of them are looking like flag patterns and whatnot. The problem is if this does come back down to retrace and that Bitcoin pattern actually does break down to the downside, then your altcoins are going to get hit worst out of most of the cryptocurrency. And here's why. When we have a look at these funding rates, over the weekend, a lot of them have cooled off, and that's actually really good news. If you happen to catch my video on Friday, I went into full detail to help you understand funding rates, and I highly recommend you check that out if you haven't already, because funding rates don't have to end with a liquidation hunt. That is a myth, and in that video, I explained to you why. So with that why reason in mind, you can actually see a bit of that result here now, where on Friday, the only thing that had really reset was Bitcoin, but over the weekend, some of these others have come down a lot as well. ETH has come down a lot. Solana has come down a lot. So, some of them have reduced quite a bit, and that would be because potentially consolidation, people taking profits, they feel the market is overheated and things have just naturally reset. That's a good sign, but here's your bad sign. Let's have a look at 𝗶𝗶𝗃, for example. 𝗶𝗶𝗃 is still 0.03. Okay, so when you compare all of these funding rates, if you were to look for the highest funding rates still, you're going to find them basically only in the meme coins. Have a look at WIF. WIF is crazy, 0.07 still. Bonk is still at 0.04. This puts us at a very high chance of a false move to get everyone bullish on meme coins, take the breakout trade, and then it swings right around on you. Look at this liquidation heat map on WIF as an example. The delta right now is to the longs. That means many people are long on WIF, and that delta is 11K currently. When you have a look at the liquidity, we're looking for the larger spikes here to the right side of this chart, and all of this pink and orange down below is the liquidation levels of people who are currently long. Above price is liquidation levels of people who are currently short. So yes, there is liquidity above price, but there's a hell of a lot more liquidity below price. And so it's very possible that we get a temporary false move to the upside to just have everyone believe that being bullish was correct, take out of super high level potentially, and then do a sharp turnaround to come and take these out. So what does that mean? Does that mean I'm telling you don't trade meme coins? No, it absolutely doesn't. I'll tell you what to do if you really do want to trade them. And let's use WIF as the example because we know the funding rate is super high. Let's just say, for example, you see an uptrend, you see this as a pullback, maybe you see it back to the 50 EMA and you think that's a really good area to go long. I'm not saying it is, I'm just using this as an example. Then the only way that I would trade any of these meme coins right now would be with short-term targets in mind. Knowing what those funding rates are and the position that Bitcoin is in, I would not be taking long positions from here and looking for super high targets that are beyond the prior high. If you want to be safe in trading meme coins right now, your best bet is to day trade them only back to previous high, or even just target a 2-to-1 risk reward at most and just get in, take your profit, get out. That's the only thing I would do because eventually this probably is going to turn around. So as you can see here with WIF, I'm on the 1 hour time frame. With the funding rates so ridiculously high, I would not be trading this on a daily time frame right now. Looking at 𝗶𝗶𝗃, the move has already happened. So if you're looking to trade 𝗶𝗶𝗃, same thing. Just keep short-term targets. And when it comes to those targets, either you are taking partial profit or you're moving your stop loss up along the way. Exactly how I told you to manage your Bitcoin trade last week that saved so many people from the Bart Simpson liquidation hunt is exactly what I'm telling you to do with any of your current meme coin trades now. Because worst case scenario, if it keeps going, you keep making money and that's fine. But your trade needs to be protected, especially when those funding rates are so ridiculously high. Look at Bonk as another example. So again, Bonk, we know those funding rates are high, but we've had a breakout of the daily resistance. We've come back and we look like we're flagging. So these coins are really showing good bullish market structure, and that's what we want to see. So that's why I'm not saying don't trade them. I'm just saying be aware of the dangers of these right now. And if you do want to trade them, if you really do see a good setup, just make sure they're short term and smaller risk to rewards so that you can make sure you bank profits before anything turns around. Now, I'm going to finish off this video by showing you the Bitcoin heat map orders. But just quickly before we do that, as I mentioned to you, I had the absolute privilege of going to all 3 days at the Grand Prix this weekend in Abu Dhabi, had an amazing time, and I was taken there thanks to OKX. So just want to do a special thanks to you guys. OKX was the first exchange to ever support me back when I was a tiny channel, like 1,000 subscribers. So I'll always love OKX. And if you are able to trade on OKX in your country, if you use the link down below to create your account, you do get a 20% trading fee rebate. If it's not available in your country, there are many other exchanges down there for you to choose from as well. And don't forget, if you do use any exchange links that are listed in our videos, you also do get access to our free Discord. So all of the instructions on how to get in there are listed in the description of this video. Be sure to check that out. Now let's have a quick look at the current heat map orders. I'm not seeing a lot above price. The highest level currently is sitting at around $102,000. Not sure if we'll even go there or if we'll fall straight out. But if we do fall to the downside, the first area to watch is going to be around the 95 to 95.1K region. And if we remain bearish there, then we still have these orders that I've been talking about on this channel for a couple of weeks now. They're still sitting there. We did spike into the top orders once, but they have since returned, so more orders have opened up there. We didn't make it all the way to the bottom, so that range is still actually relevant, and that range is between 89.8 to 90,200. But we won't have to worry about that unless we first break through around the 95 to 95.1K region. And the fact that I see these levels here and then these next ones below, it kind of tells me that it is possible that we go into a couple week correction from here, and I personally wouldn't mind that at all. I think we kind of need it to reset the leverage and reset the funding rate. And it would feel a lot better to know that we've kind of flushed everything out and now we can move on. The leverage flush out that we had last week, it really only affected Bitcoin. And so we still have to sit on the edge of our seats with a lot of our altcoins. So if we do start to get some downside this week, don't worry about it too much. You know the levels to keep an eye out on. And I still think at the end of the day, we're long-term bullish. The market's just a little bit overheated right now. If you've enjoyed this video, be sure to hit the like button and leave me a comment down below. And also, I'm going to leave you now with some footage from the Grand Prix. See you guys on the next one.